Welcome Forex traders. We're looking at the AUDCAD on the 4-hour time frame here this evening. I've just opened a long order on this pair based on this center band rejection signal that has formed right here after we come off of this bottom. Okay, so the market goes from a downward direction to a sideways direction, and typically what happens after that is you're going to get either continuation back down to the downside, or the move is going to begin to taper to the upside. So I'm looking at this break right here. As we break out, we get the stop hit, and this is significant because really, if you look right here at this level, we would have had to have required a pullback in order to get our 2 times profit down here at this bounce, which did not happen. So following this stop hit that didn't pull back enough for an entry, we have a center band rejection that forms in the market right after that. We failed to reach this low before giving us this rejection signal right here forms. So I waited on a pullback, a slight pullback, set my 2 times profit at this logical swing high right here. So we will pause the video and come back to this in a while. Okay, approximately 10 hours has went by, and our 2 times profit target has been reached right here as expected, but not before giving us a little bit of a scare. This candle right here at one point formed a real dark candle that was going pretty deep here into our profit, or towards our stop loss. However, then it sprang back up in the direction that we expected. So let me just kind of reiterate what I see here and why I got in this trade and traded against this stop hit to the downside. Okay, as the market comes to the downside, we stall out and see this consolidation where it bounces off highs and lows. Okay, that is indicative of a strengthening market. When you see the sideways momentum, the banks are collecting buy orders and sell orders, and it's a strengthening market. The market stabilizes, and A, it goes back in the direction that was already going, or B, it'll turn and go back to the upside. So we look for a pattern and a signal within this consolidated market, and what we see right here is a stop hit, okay, in the form of this bearish engulfing. We break out of the high, and then we move back to the downside. Or if you're drawing this as the high, we break out and form this bearish engulfing signal. However, if you put the Fibonacci tool on that, you'll see that you could not have reached your 2 times profit target without a deeper pullback than what this candle right here gave us. Because we were unable to get into this trade based on our 2 times profit target, we stayed out of it. The market then comes down and forms this rejection signal right here, this bullish spike followed by the engulfing signal rejecting the center band. For the center band rejection signal, telling us that, hey, it's time to trade to the upside. This is, in fact, it failed to make a lower low. It failed to reach this consolidated low. Instead, we get this signal. So this, followed by what was a higher close right here, is our signal that we wait on a little pullback, we go for the long, and we try to keep our 2 times profit at this level right here, this most recent, this bounce point here, and this swing high here. Okay, I'm not targeting this because obviously we're going to break through this, okay, because we already did. So we're targeting the next most recent swing high, and that's what we did. And as you can see right now, it's taken our 2 times profit. Now where it goes from here, it doesn't matter. If it comes back and turns to the downside, we could care less because we've already closed this order. So there you have it. That's the center band rejection after a failed stop hit, failed entry setup on the stop hit.